Highlands Light FM.
You actually read your
No,
statement?
not that. Yeah, there we go. I'm checking on your money and find out what's going on Wall Street. Not a bad day yesterday. Can we keep the momentum going? Let's find out. Phillip Statler from Statler Financial Services in downtown Sebring is on the phone this morning. Phillip, how you doing?
Hey, I'm doing well today, Dave. You're right. Yesterday was really a good day from all standards. I mean, we had some really good numbers come across the board. A lot of green ink. I got to say, I don't think we're going to follow through today, though, based on what I'm seeing in the futures anyway.
And not what I'm seeing on my delayed quotes either. To quantify it for everybody, everything was up by more than 1%. Dow was the laggard of the bunch. It was only up 1.4%, up 555 points yesterday. Standard & Poor's was up by 88. NASDAQ had a party time, up by 2.33%, up 402 points yesterday. They really, really liked the overachievement that we got out of retail sales, I gather.
I guess so, Dave, because then you got the Russell 2000 even beat the NASDAQ up almost 2.5%. So, but hey, let's don't leave the VIX out. I mean, you know, the ups and downs in the marketplace. The VIX was actually up almost 2.7% yesterday. Everything was partying.
Yeah, I was going to say, I'd rather this not be one of the days where I say the only people that made money were the ones that bought the VIX, and yesterday you actually made more money by being invested in the market. Kind of brings us up to this morning. Two items over on the ticker this morning. We got one of them, and it's really not what we had in mind. New housing starts, they expected them to go down a little bit by 0.2%, which would have been kind of a yawner. Number just cleared the ticker, and new housing starts were down 6.8% during the month of July. Given what housing and construction is capable of doing to ancillary fields that, you know, the construction workers and the contractors buy and everything, that's one of those big sectors that a couple of 0.1% would not be good news. When you miss by a margin of 12-1, you kind of go, uh-oh.
Yeah, that's just not good when it comes to housing starts, which then gives us an indication that the real estate market is slowing down. And I will say, Dave, I've talked to a couple of realtors here locally, and they're seeing the same thing. I know in my neighborhood, I'm seeing the same thing. I heard an ugly word, though, this week that has started to slip up, foreclosures. And so that is an indication also that our economy and jobs are slowing down as well. They are starting to see some foreclosures are starting to work through the system now, and that's something we've not heard talked about.
You know, a lot of people that figured they were smart by buying ARMs right before the numbers started really going up on mortgage rates. I know a few of them really are choking hard now. I've got an acquaintance who saw her ARM go up massively on rate increase, and she's kind of going, it's you know, sometimes if you can get 4%, you think it might go down from there. Think about refinancing if you're guessing right, because, boy, the downside risk to having it go up if you guess wrong can really be an SOB, can't it?
Yeah, it really can. It can as well.
Absolutely. One bit of bad news as well on that front. Mortgage rates started ticking up again last week, and we're starting to see an improvement on that. And if you were expecting that 0.5% drop on the federal interest rates next month when the Federal Reserve meets, Jay Paulson was on the rubber chicken circuit again yesterday, and he threw about as much cold water as a Fed chairman can on those hopes. He said, we're going to be deliberate, we're going to be planned, we're going to be judicious. He did everything but say, don't even think about 0.5% in September.
Well, you know, it did not cool the markets off yesterday, did it?
No, it didn't. I mean, but you know, the Wall Street investment community works upon what they think might happen, and sometimes they just take the news items that tend toward decreasing the odds of that happening and blow it off, saying he's just trying to give us a pleasant surprise next month. Somebody thinks he's Santa Claus, I think. I still, irrational exuberance. Maybe these housing start numbers might actually, I hate to cheer for a downtick, but I also don't want to see a major surprise to the downside if they only give us 0.25% in September when the market's expecting a full half.
Well, that's true. And I mean, at least he was talking that way. So there's still the anticipation of a rate cut in September. And if we don't, I mean, I would not expect a 0.5%. I know there's people that are hoping for a 0.5%, but a 0.25% would be more prudent if, again, if any at all.
And right now, my faith in Jay Powell is actually running pretty high. Because I've said it before. You can actually manage a legitimate soft landing to an inflationary spiral like we've had over the last 2.5, 3 years. I think that man deserves a Nobel Prize for economics. So I'm willing to go with his instinct. And while on the paper, I'm not seeing a justification quite yet for a rate cut, I do see the justification in his mind. And a 1/4 point won't do any harm. A 0.5 point, I'm afraid, to be like a heroin injection.
Exactly. Yep. It would juice up the markets for sure.
And probably more than we need to have it juiced up. Anyway, the futures are. I kind of looked earlier before the 8:30 data dump came out, and I kind of saw the beginning of a little bit of profit taking. I'm just going to kind of assume that when we get to the futures in real time, we're not necessarily going to like it off of the housing starts numbers. Toward the tail end of earnings season, I know you got some reports to tell us about. Who's got some good news for us this morning?
Well, good news. I'm gonna tell you about the only good news I saw was H&R Block. H&R Block got a big bump this morning. That they had a pretty good quarter. Earnings came in at $1.89 versus $1.74 expected. The revenue was slightly above forecasted as well. I think I saw they increased their dividend and their buyback of stock. So they're trading up almost 8% this morning.
Cool. Now, I don't know that industry intimately, but I got to assume about 85% of their revenue happens between January and June.
Yeah, it definitely does for sure. Yeah, the other we had Applied Materials, a semiconductor equipment company. They reported they beat came in by 10 cents a share at $2.12. Revenue ahead of expectations as well. But even with all that, there must be something. I don't. It's not showing up here anywhere, but there's something that happened within the report or within their future earnings that's got them trading down 3% this morning.
Ooh, I wonder if some of that just isn't concentration of the AI field at a small number of companies, and they're just getting nervous.
Could be. Let's talk about. This isn't an earnings report, but this is a big deal. Bayer, the life science company, they're the makers of Roundup. And Roundup had had lost a lawsuit, and we're going to have to pay out a bunch of money. Well, they won a lawsuit now, so that means that the decision will have to, and the appeals have been done. So now it will have to go to Supreme Court to determine which one of the district courts is correct on the appellate. And so that's got their stock trading up 10.5% this morning.
Cool. I know when Bayer bought Monsanto with that pending lawsuit running against them, it was kind of they're kind of ingesting a major amount of risk and risking a major league course of indigestion. I would imagine that if that got taken off their shoulders, that'd be nothing but good news for Bayer shareholders.
Oh, absolutely. That would be huge.
If you want a bellyache, let's buy the company that makes Roundup and see what happens. That's a bellyache for any company to risk. I wondered about the sanity when that happened a few years ago. Well, we were up yesterday. Pretty good day on Wall Street. 45 minutes before we opened. Some not such hot news on the economy. How are we doing 45 minutes early this morning?
Well, Dave, everything is in the red. The Dow has dropped substantially since those housing numbers came out, down 1/3% right now, $137. The S&P 500 is down 0.5%, almost $28, and the Nasdaq 100 is down a little over 0.6 or $123. And so some numbers there, not what we want to see this morning. Silver's down a little over 0.2%. Gold's up. Huge. They're at 1.1% this morning. A pretty good sized jump for that. Crude oil You got to like this, Dave. Down 2% this morning to $76.56 a barrel.
Well, I'll take good news, even if I suspect it's based upon expectations of a slowing economy. I don't really want that to be the reason that oil goes down, but okay. Asian Rim market profoundly mixed at the close at 6 a.m. Japan just took a bath yesterday, down 3.5+%. Rest of the index is on balance, with the exception of one of the Chinese mainland markets, all up fractionally. In the European theater, we're looking at, again, a little bit of a mixed bag. The UK is off by a bit. Everybody else is up. The overall European index, call it right near dead flat even. One of the two European indexes is down by 100th. The other one is up by 0.05%. It's a pretty quiet day over in Europe. Getting that retirement together and getting a plan and getting the risk out of your portfolio is real important with the ups and downs we're seeing on equities lately. How do I find you to find out where the risk is in my portfolio, Phillip?
Dave, that's exactly why I created the Core Retirement Design. Give me a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All righty, I'm back here again Monday morning to find out what the heck's going on and what they did to us over the weekend. Catch you next week, my friend. I appreciate it.
All right, buddy. Have a great weekend.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. Hope your week went well. Hope you have a great weekend. Join us again next week. Until then, have a great one. Bye now.